Good evening, ladies and gentlemen. Thank you very much for waiting. As usual, we'll start our media briefing with some opening comments from Chandra, after which we'll take questions as usual.
Thank you, Pradipta. Good afternoon and good evening to all of you. It's a pleasure to meet with all of you to announce the quarter two results, and we've had another spectacular quarter. We have delivered a revenue of 5.1% at 15,621 crores, a volume growth of 5%. And the growth has been supported by good performance operationally in all parameters. And operating margin is about 4,179 crores, 26.8%. And our net profit sequentially grew 7.1%, and on a year-on-year basis, 44% to rupees 3,512 crores during the quarter. We had a gross addition of 18,654 employees. Total employee count is 254,076. And our utilization went up, both including trainees and excluding trainees, by 0.5% and 0.3%. And our attrition is all-time low. And our IT business, it's below 10%, and overall on the company is about 10.2%. So it's the lowest in the last 10 quarters. So it's been a fantastic quarter for us. Then in terms of color, I think the most important thing is it's a well-rounded growth. If you look at the markets, we've grown in every market. North America has grown almost 3.5%, 3.6%, UK up 5.7%, Europe 4.7%, Latin America 8.3%, and India 11.7%. And Asia Pacific also delivered excellent growth. All our industries have done very well. BFSI about 4.6%, and then manufacturing almost 10%, then retail about 6.5%. I mean, every industry has grown. So it's been really a good quarter. And in terms of client metrics, we have added more clients in several revenue bands. And in terms of the new additions, about 41 clients have been added. New deal signings, we're at least announcing 11 new deal signings, and these deals have come across industries and across markets. So I think we are also seeing a good pickup of discretionary spend. If you look at our engagements that we've executed, won, and also in pipeline, our investments in digital, whether it is social media, big data, mobility, and analytics, and cloud, gaining tremendous traction. We have given some color so that you can see it in the press release, but a large number of engagements. These are all coming from discretionary spending and also transformation engagements. So we have done very well, and we look optimistic. Thank you. There are a couple of other important announcements that I want to share with you. Mr. Mahalingam, who is a veteran, who has pretty much done every function in TCS, both sales, business, HR, and now finance for the last so many years, will be stepping down in February, on February 9th to be precise, when he turns 65. And we have announced his successor, Rajesh Gopinathan, who has been with TCS since 2001 and has done various roles in TCS across sales, strategy, and business finance, and various finance functions over the last several years. Currently heading the business finance. is being designated as Deputy CFO today, and he will take over on February 9th, 10th after Ma retires. The other announcement that we want to make is we will be consolidating or merging eServe, which is the subsidiary we have, into TCS. We have come up with a swap ratio after the work done by the external firms to a 1 rupee share of TCS and 10 rupee share of eServe on a basis of 13:4. Okay, and that's something that is happening. And we'll also be folding in the acquisition we made of CRL entity into TCS. So it's more a consolidation. So those are the two other information.
Thank you, Chandra. We'll take questions. CNBC first. Sajid or Rima, who's up?
Hello. Chandra, congratulations on the number. Can you give us a color on the kind of pricing environment that you're facing? And while Q1 you had the advantage of French Life volumes coming in, did we see the same kind of volumes coming in Q2 as well?
No, the Q2 volumes are about 5%, and there is no kicker like a French Life. So it's come across the board. There is no singular kicker.
And pricing?
Pricing is pretty stable. We will share the margin analytics and so on and so forth. But this quarter, to basically give you color about, if you look at the margin and revenue analytics, etc., basically there has been a pricing, there is a productivity impact of about 48 basis points. And that is primarily due to two reasons. One is to do with our revenue mix this quarter from multiple geographies, all over emerging markets, namely Latin America, Asia, India, Middle East, Africa, etc., have grown significantly, and they slightly operate at a different price point. And so there is a small difference there, but pricing by and large is pretty stable, and we have basically got volume translated into growth.
So is that the trend that's going to be going forward as well, where you all will be focusing on India, APAC, which typically operate at lower margins, and therefore this productivity decline which you're seeing in this quarter's margins, is that the trend, something we can watch going forward as well?
Not necessarily at a lower margin. See, this is what I want to say. They operate at different price point. Different price point does not mean different margin. They also operate at a different cost point. So the question is already pricing. So that need not necessarily translate into margin. Some markets will operate each market operates a different pricing and a different cost structure. So the pricing and cost, but so I would say that.
So it's another quarter where your volumes have come in way ahead of industry peers. Last time 5.3%, this time 5%. Is that this 5 to 5.5% what we can expect from TCS in the coming quarters?
We don't give guidance, but we have said that we will be delivering ahead of the NASSCOM. And we are sticking to that statement, and we are on course.
NDTV, Asta Maheshwari.
So can you just throw some light on your forex losses or gains this quarter? How's it been?
You know, we had a gain of 92 crores as against a loss of 93 crores last quarter.
Reuters, Aradhana.
Hi. Just wondering, you expect pricing to be stable for the rest of the year as well?
Yes.
And also wondering, what are you hearing from your clients, Western clients, in terms of their decision making? Has it picked up? Are they speeding up decision making, slowed down?
Frankly, we feel that based on our discussion with our clients, the environment is good, and at least the client environment in terms of what they do with us and what they intend to do, both in terms of efficiency, also in terms of growth, discretionary spending. projects are on track, deals are getting closed, and there is a significant impetus on digital initiatives. All our customers are focused on the whole digital initiative, so we remain positive.
And also in terms of this restructuring, are you expecting any sort of impact on your finances from this?
No, not really. So this is more a
Just an internal thing.
It's actually a merger
Yeah,
of
yeah.
companies. Different entities are there.
Right.
Out of the four,
Just we're reducing some subsidiaries.
yeah, subsidiaries are essentially folding in.
Okay. All right. Thank you.
Z, Amol.
So congratulations for the result. I mean, I know that there are different ways for the pricing, fixed pricing, part-based pricing and all. But what I would like to understand is how much is the, repeat business growth in this particular quarter?
Our repeat business growth is in the region of 99%. You got it in the deck, but it's close to 99%.
Ajoy, I would like to understand that India was always an offshore model for an IT companies, but now since most of the IT companies are going ahead and hiring on-site, how much is the input cost? I mean, how much is the addition now?
We are hiring both in India as well as overseas, and that is the way we have been doing all along. And even in this quarter, the hiring that we have done has been pretty strong. It's about 18,654 as far as gross addition is concerned. And that we have done in India, because if you look at the India hire, close to about 70% of that has been trainees who have come in. And we are sticking to our plan.
Chandra sir, by any chance, do you see some kind of impact on the margin since you will go ahead and hire a lot on-site?
See, we have said that we will be operating around the number we are operating. Maha has explained in multiple forums, and I have also said it in the analyst calls. Our intent is to operate around this number, the 27% number. And we feel confident that we will be able to operate in that number.
Okay. One more thing, Ajoy sir, since visa rejection is still high,
Correct.
and it's one of the crucial thing. How are you dealing with it? Do you see any hope that since NASSCOM is also talking with the WTI and all, the issue will get resolved?
Hope is always there, but at the same time, there are realities, which is visa rejection rates are high. But I've been maintaining that. It's not that something that has come up recently. It's been like this for over a year or maybe more. And it means that we have to plan in advance. We have to plan much more in detail. So, and as a result, we have also taken some steps. For example, we have gone towards more of H1 kind of visas. And we are planning in advance so that we exactly know at what point in time we need what kind of skills. We are hiring locally. We are also using subcontractors locally as business associates. So these are various steps that we are taking.
Last question, Mahasa would like to understand one thing. I mean, your take on the dollar. I mean, we have seen some stability in last 2 weeks in dollar terms, but still going ahead, will you hedge and to mitigate the volatility?
No, you haven't seen any stability.
not
Second
that
half
high-
of
not that
second
high as
half
it was
of
a month
September, rupee appreciated significantly. It breached 52. Today it is closer to 54. So that's the number that we are operating in. And it's very difficult to say. As I had explained, we have hedged fully for up to Q3. We have hedged substantially for Q4. And next year, we have taken some hedges for the first quarter. And the hedges that are taken are all those which protect the base rate and leave the upside open totally.
Financial Chronicle, Yasser.
So Mahalingam, if you could tell us what is the outstanding amount of these option contracts and what kind of value have we locked it in at?
See, I mean, this is a complex figure in terms of outstanding this thing. So to give you a number, it is a little over $4 billion. And, as I have always said, it's around the 52, where that's a base. If rupee turns out to be 54, we get 54. If it turns out to be below 52, we'll get 52. That's the number.
Chandra, one question to you about the operating margins. You mentioned that a lot of growth in the emerging markets, which is why the margin structure perhaps looks a bit different. So what you're saying is that when we look at the YOY versus the Q on Q margins, we should not read into it an erosion in pricing power. You're saying it's a business mix change.
Yeah, and also there are, if you see this quarter, our on-site work has moved up. Percentage of revenue on-site has gone up because we have taken some big transformation projects in Europe, which is getting staffed on-site. So it's very on-site heavy at this point in time, where the cost we are incurring is significantly high at this point. We've overstaffed some of these projects at this point. So it'll get, after a few quarters, it'll get to a normal profit margin level. So there is nothing to read there, and there are 2 or 3 things that's contributing. One is this on-site movement overall, some of these transformation projects, and the third thing is the profile and mix of the growth that has come this quarter. And they're all contributing little. So that's how you are having this drop. And you shouldn't read much into this. I'm pretty confident. We're pretty confident on margin. And we are also positive on the growth.
So what would be the increase in on-site? Could you just give us those metrics, please?
Huh?
What would be the increase in on-site? Could you give me the metrics, please?
It's about 0.5%.
49 basis points.
0.5% it is moved on-site.
One more question. You mentioned also that discretionary spend has come back, and you're seeing a lot of traction on that. If you can give us some perspective in terms of, a quarter ago also we were still sort of saying that clients are dithering and wondering, that they want to reinvent themselves, for the digital future, but they're still wondering about whether or not to go ahead. What's changed and what's up?
We are seeing transformation deals. We are seeing big data deals, mobility deals, platform deals. If you look at the press release, we are giving you sample engagements that we have won. And we are not seeing any delays in decision making in any of the deals, whether it is small or large. I think customers are more getting adapted to the macro. That's the point that we have been reiterating. And so, barring the usual thing that happens, for example, if you take a Q3, in Q3, typically in December there is furloughs, which happens every year. That is, big industrial companies, manufacturing companies, high-tech companies, sometimes even retail CPG companies. So they all take a furlough decision. So those kind of things will still be there. But by and large, we are seeing that decisions are getting made, contracts are getting closed, statements of works are getting issued, and exciting projects are happening, transformation projects, digital projects, co-creation opportunities. I think we're pretty positive on all those.
Just one last question for Ajoy. Chandra mentioned that this has been your lowest attrition rate that you've seen in the last several quarters. Is it, the safety factor which is now attracting people to TCS, that here is a company that's continuing to grow, and, in times of fear, there is a flight to safety. Is that what is happening?
You can be a little more generous to us. You're an exciting company, right? So you don't always have to find fault with us. You can be a little bit generous.
You answered it. What I was going to say that, yes, we should take credit sometimes, right? So, no, we have been doing well. So the overall results and everything else is a very good positive factor that is within the organization. That helps, plus the kind of effort that we have taken in order to have our employees engaged, everything else. So everything contributes towards this.
What was the variable payout
This quarter is 100%.
Financial Express, Shruti.
Hi, congratulations on a good set of numbers. Just wanted to clarify, you have mentioned about your merger with of TCS eServe. Just wanted to know what's the status on the other 3 companies that were also discussed at the board meeting today, Retail, Full Serve, and Computational Research.
All of them are getting merged. They're all entities now.
Okay.
They're all merging them, folding them into TCS.
At that share, the swap ratio and
No,
the share
the
price
others
that
are
you-
all 100%.
100%
owned by
owned.
TCS.
Okay.
This has a small minority shareholding of about 3.5%, and eServe.
Okay. And also the UK deal of Criminal Records Bureau that you all had won, that's an 8-year contract. Just wanted to know, has the revenue started kicking in from that, or will it be from next quarter?
It will come in the future.
By when?
Engagement has started.
Also, there was news about a lot of Tata companies contracts being given to TCS now. So just wanted to know.
So all I would say is that we compete in the marketplace, and with every opportunity that is there in India and abroad, and we also bid for other companies and go through the same process, and sometimes we win, sometimes we lose. We like to think that we win, we like to win, we always make an effort to win more. There is nobody gives us a contract. I like the way you said it. So nobody gives us a contract, we have to win a contract every time.
Business Standard, Shivani.
Hi, Chandra. Hi. Congratulations. Some of your peers have been talking about a huge renewable market coming up, 40 billion and all sorts of numbers being thrown at. What's TCS strategy here? You have been part of a lot of large deals yourself. So first on that.
See, it's nothing new. Always the industry operates in long-term contracts and renewals happen. Renewals happen every year. And we scan the market. We continue to qualify and decide to play where we want to play. So we play significantly in that market as well. And if you look at our infrastructure outsourcing revenues, and we are doing incredibly well. Even again, this quarter, we have delivered the maximum growth as an infrastructure as a service line. And it's easily getting to be a $1.3, $1.5 billion business. So we'll continue to play in that market. And so we are present across industries and across markets. So we partner with clients, sometimes in driving efficiency, sometimes in driving innovation. And now there is a significant opportunity because we have invested in domain skills, because we have developed a lot of intellectual property, because we are investing in huge areas like hugely in areas like digital, which encompasses all these. We are able to engage with clients in co-creating, because every industry, every business process is almost getting reimagined, and we are winning in that game. And our efforts would be to be holistic with clients. That's what we always say. We are a full services company. We play on the efficiency side, we play on the innovation side. We like to be partners to clients.
You spoke about 41 wins this quarter. Could you tell us how many of these are large deals?
No, 41 new clients this quarter. And individually, there is a lot of wins.
Okay, so how many large deals?
11 large deals, we would like to say.
Okay, and you're also saying discretionary spend is back. Could you just throw some more color, because some of your peers are saying it's still under pressure?
Many of it is in the press release.
Fair enough.
Right.
Ajoy, for you, could you give us the net addition for this quarter?
10,531.
And any targets for the next year's hiring, campus recruitment?
Campus recruitment, yes, we've already started, and we started from 7th semester as what we have discussed with NASSCOM and everybody else. As far as next year is concerned, we will be doing at least about 25,000 is what our plan is at this point in time.
We already done half of it.
We have already done half, yeah, about 12,000 is already done.
One final question to Phiroz. The recent deal win that's been talked about, we see a lot of focus in the UK towards the government deals. Is that the strategy that you would like to go ahead with if you're looking at the UK and Europe?
We've looked at government in India all the time. There's no reason in any of our major markets not to look at government. And whenever there's an opportunity in government, we will bid, whether it's the US, UK, or any of the geographies we operate in.
Sure, the way to look at it is we have got to a stage today, we have a lot of credibility. We have the scale. We have a wide range of capabilities. And we have repeatedly done many projects and gained confidence and the ability to execute complex engagements. These are complex program management engagements. And to take a contract of this size and manage it, whether it is a nest, whether it's a passport, this requires that organizational capability, rigor, and people, domain, process, tools, all of that. And we have all of that. So we will pick those engagements. And we are able to invest and build a solution. These engagements don't happen because you respond to an RFP, you have to be proactive in building the solution. So, and we have that capability, and we have that strong foundation. So you will see us getting into such engagements because we feel confident of execution. At the end of the day, that's the most important thing. Can we execute? Can I deliver? Can I have a satisfied client? And can I make money?
And the client also sees that we have that capability.
Ithika Newswire 18.
Sir, could you please repeat the swap ratio that you said with eServe?
13 1 rupee share of TCS to 4 10 rupee share of eServe.
Okay. Also, Maha, my question is to you. In the previous quarters, you have said that volume growth going forward will be lower, and you had even mentioned that there might be an up to 200 basis points impact on margins because of on-site hiring and other such investments. How is it that you still managed a much lower than expected decline in margins in this quarter? And what's your outlook on, you did say that you expect to keep margins around the same level, but in the coming quarters also, do you think that on-site hiring might put some more pressure on margins?
See, first is we didn't give any guidance in terms of 2% lower margin. All that we said was that there are pressures. You see, the reason why we said that was because Q2 traditionally has been an extremely good quarter, and therefore, therefore, are there going to be any margin impact? The point that we made at that point in time was that there were types of contracts which required ramp-ups and which required insourcing and all those kinds of things, and that's the reason why the margin would come down. The first one is, as far as the volumes are concerned, it is certainly less, but marginally less than the previous quarter. As far as the margins are concerned, because of the factors that we have explained and so on, there has been a slight reduction. I want to also make one more thing, that we also said that it is going to be a front-ended growth as far as this year is concerned. I think given the volume structure in both these quarters, I think that has played out. As far as the next couple of quarters are concerned, which will make up the whole year, we believe that we are in course to deliver the kind of numbers that, the percentage that Chandra talked about, which is essentially be around the 27% mark. We believe there are enough addition. What it will be in terms of volume growth, what will be in terms of margin growth and so on, that I will not be in a position to talk about right now.
Chandra, could you share with us what's your view on volumes going forward? Do you think that you will be able to continue with the volume-led growth? Because for many quarters now, it's been industry leading, and 5% again this quarter is huge.
We don't give guidance, so I can't really be very specific, but I've told you enough qualitative statements to say that we are optimistic.
We started with CNBC, we'll finish with Rima or Sajid. Take your pick.
Sir, could you tell us how many deals are in the pipeline currently? And in which verticals?
Many deals are in the pipeline.
No, how many deals you all are chasing?
At least 20.
Right.
And then it's across markets, and US, Europe, Latin America, Asia, India, Middle East, Africa, everywhere. And good pipeline in all verticals: financial services, good pipeline in telecom, retail, manufacturing, life sciences, and government. So very, very good traction. And
will there be a ramp up on those on-site deals which you all are currently working on? So right now you said on-site revenues have gone up by close to about 50%.
Yeah, they will shift to the normal on-site offshore ratio, maybe after a couple of quarters. Maybe in the Q4. So.
But in Q3, will this ratio increase further, this on-site? Will it go
No, I
up?
think we have stopped on-site in these deals. And if there is any other deal in which we increase, I will tell you. But these are transformational deals. If you take these kind of deals, we do have to ramp up on-site. And especially sometimes we take a few people as part of the engagement. Sometimes we have to recruit locally because of language reasons. And many other reasons. So without going into a lot of details, this is to be considered as a normal business, not an aberration, not a cause for concern.
The 76 basis point decline in margins, could you break that up? You indicated 48 is because of productivity, the remaining?
Okay, I'll give you that margin. Exchange rate impact, there was a negative 12 basis point. Offshore leverage, there was a 50 basis point, but that is because of the different markets and so on. That was a negative 50. Then rate productivity improvement plus SG&A efficiencies and so on, together they make up 9 basis point minus. 14 basis point minus. So totally it will come to 76 basis points minus.
Asta from NDTV has a question.
Sir, how are you able to maintain your attrition rate without giving wage hikes, considering all your peers have given?
We have given the highest wage hike we did in Q1. So
You were not here
we
for
gave
that
it on
question.
April 1st.
Check your archives.
So, just another thing, sir, in recent analyst meets, your commentary was somewhat toned down. So, right now you're seeming much more confident. So, what's the reason for this change?
When we were, which commentary? I have not met anybody, and I don't think that there was any big meet we had recently.
No, we had, she's referring to the one that we had in the middle of September. See, I don't think we, one of the things that I said at that point in time is that we told you a story at the beginning of the year, and we are consistent with that story. We told something at the middle of September where we said that it is going to be a growth quarter, but a shade less than the growth that previous quarter. We said there would be a margin drop for the variety of reasons, and both of them are exactly what we are saying. Should we have looked more confident in September 15th meeting? That's a different point of view altogether.
So just one more
Better
question.
to be this way, right?
Yeah.
So just one more thing about your nature of new projects. If you could just throw some light on what you all are planning.
I think it's across the board. I mean, we get a lot of efficiency projects. Sometimes it is rationalization of application portfolios. Sometimes it's consolidation of systems into a single instance. Sometimes it is infrastructure, virtualization and cloud. Sometimes it is single instance SAP, global instance. Sometimes it's risk management, credit risk, market risk kind of projects, regulatory compliance work, and we have announced a transformation deal with an insurance company where we are completely changing their core policy administration system from set of old systems to a completely future platform, helping companies to embrace digital. So it's just one broad concept. Can you come in and then tell us how to think digital for us? So it will result in building applications in mobile, smartphones, linking smartphone to mobile, smartphones to iPads to traditional desktop systems, sometimes doing analytics engine. We have given examples of analytics engine that we are building for consumer product companies, a financial services company, huge effort in terms of building a retail companies. And it's huge. Sometimes it's a transformation where we look at IT operations, entire IT portfolio, from infrastructure perspective, operations perspective, and from IT system perspective, and then decide, can we verticalize the portfolio? Instead of dealing as a horizontal portfolio, this is application, this is infrastructure, this is operations. If it's a bank, can I look at the whole thing as a securities, soup to nuts, payments? So I think we are getting into sophisticated engagements as well, and it's across the board. The whole thing about us is we are continuing to invest, getting prepared, be relevant, be relevant, be relevant. That's the only focus. That's what all of us do. I do the same thing, my team does the same thing.
All right, sir. So just this last thing, sir.
Thank you.
Okay, sir.
Okay, go on.
Save it for Monday.
Finish
No,
it.
no, nothing. Just one thing about, like you said, about acquisitions only. Anything in the consulting side that you're looking for some sort of...
We're always looking. If there is a good asset, let me know.
Thank you very much, ladies and gentlemen.